In today's video, I am going to show you a trading strategy with an exponential moving average, EMA, the ATR stop loss, and one of the best indicators that no one shows you, the SSL indicator. The strategy can be used on any time frame and on any type of financial asset. In my case, I am going to use it on Ethereum on the 5-minute chart. The first thing we have to do is select an exponential moving average, EMA. We'll set it to 200 periods, increase the thickness to the maximum, and change the color to white. This moving average will serve as a filter. That is, if the price is above the EMA, we will only carry out buy operations, and if the price is below the EMA, we will only carry out sell operations. We will not operate in case of that the EMA is flattened, as it could be in this case, as it could give a lot of false signals. The second indicator that we will have to select will be the SSL channel. We will leave this indicator with the parameters that come by default. Finally, we will select the ATR stop loss indicator. We will configure this indicator with the parameter of 1.1, and we will change the line type to white dots. We will use this indicator to know where to place our stop loss. To open a buy trade, we will wait for the price to be above the 200-period EMA, and on the SSL, the green line crosses the red line from the bottom up. If this happens, we will carry out the buy operation. We will put our stop loss below the white point of the candle in which we bought, and we will close the operation when in the SSL. The red line crosses the green one from the bottom up, as long as we have a minimum risk-benefit ratio of 0.5 to 1. In the case of wanting to open a sell trade, we will wait for the price to be below the 200-period EMA, and on the SSL, the red line crosses the green one from the bottom up. If this happens, we will carry out the sell operation. We will place our stop loss above the white point of the candle in which we sell, and we will close the operation when in the SSL, the green line crosses the red one from the bottom up, as long as we have a minimum risk-benefit ratio of 0.5 to 1. Let's look at some more examples. Simply incredible. Testing this strategy about 100 times, I can say that it has a success rate of 43% and an average risk-benefit ratio of 1.76 to 1, which gives us a mathematical expectation of 0.18, which means that in the long run, we will end up making money. And ready. I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.